Welcome to where we believe that high net worth individuals and their professional teams shouldn't have to struggle to find great options for deferring capital gains taxes when they sell highly appreciated assets. Don't let your failure to plan become your plan to fail, especially when the Deferred Sales Trust may be one of your best ways to exit your highly appreciated assets and defer the capital gains so that you can continue to build your wealth. You are not in the wrong place. I'm your host today, Jessica Lanning, filling in for Brett Swarts. Each episode, we are joined by some of the leading wealth advisors, business and real estate experts, and leadership specialists to share their ideas, tell their stories, and share their inspiration so that together we can make complex tax deferral strategies simple and passive income plans achievable. Our next guest spent 25 years in Silicon Valley as a finance executive and is the founder of a private equity real estate firm based in San Francisco, California, which is where I am based as well. That company offers investors a strategic way to diversify their portfolios through passive investments in mobile home parks, apartments, and mortgage notes. At some point, we will give you his website, and there you can get a copy of his free ebook, which captures the success habits of super achievers. His co-authors include heavy hitters such as Darren Hardy, Brian Tracy, Dennis Waitley, and Phil Collin, who was the guitarist for the band Def Leppard. Forgive me if I am dating ourselves, but I thought that was super cool. So please welcome Todd Sulzinger to the podcast. Welcome, Todd. Good to have you here.
Oh, thanks so much for having me, Jessica. I'm looking forward to our talk today.
Me too. All right. Tell us a little bit about your story, what brought you to this place, what your current focus is today. Talk to us.
Yeah, thanks. So, as you mentioned in the intro, I spent most of my career working in corporate finance for a variety of Silicon Valley technology companies and just took the traditional career path out of college to, try to find a good job and kind of take a traditional career path, and it had good success doing that. Worked with a lot of good companies, a lot of great people, got to travel the world and do a lot of interesting things. But I got to a point where I was a little bit tired of doing the same thing over and over again, another budget cycle, another audit, closing the books every month, those kind of things that are just common in the world of finance. And also this lack of control. There were many times where I'd been working for really great companies, maybe went through an IPO from them, things were going really well, and they got acquired by somebody else. And you don't need two finance teams, or a company's doing really well and they say, hey, we're going to move the whole finance team to another part of the country, and I didn't want to move. So there were a couple of situations like that where I just started to feel like I had lack of control working for somebody else and wanted to create my own business. I had a passion for real estate and had been investing personally for a while, and discovered real estate syndications and decided to found Blue Elm Investments to create a business out of that, to be able to help investors who want to invest in real estate but either don't know how, don't want to deal with all the hassles of finding deals, finding lending, managing the property, and all those kind of things. And that kind of got me to where I am now.
Excellent. So just to get to know you a little bit better, here at the Capital Gains Tax Pod Solutions podcast, we believe everybody comes to the planet with a special gift. We all have things that we share here to make the planet a better place. So what is yours? What's your superpower? What's your special gift that you bring to the planet?
I think it's really that I love working with people and helping people, connecting people as well. I think that's, in this business that I've started to work with Blue Elm Investments is different than my corporate career where, you're working for a company, you're working within teams, but you're not really networking and working to help different people outside your organization. But since I've been working in the real estate business for now 4 or 5 years, I think it's really kind of shown me that what I'm really passionate about is educating, helping people, connecting people, and trying to make their lives better.
So let's talk more about that. So the topic for today's show is investing in real estate to diversify an investment portfolio with what I'm going to call a real estate concierge, somebody that can help you do it, stay out of the business of identifying properties, managing the properties, that you're really doing the legwork for people. So let's talk a little bit more about that. How does it work? Who are your clients? What have you been working on? What's been happening now?
Yeah, well, when I first started, before I started my business, I was still working in my corporate job and was talking to people about what I was doing, that I'd invested in real estate personally, and that I wanted to build this business around essentially buying real estate, but with a group of people. So instead of saying, oh gosh, there's this, $1 million, $5 million asset, how would you possibly buy that yourself? What if we got 10 or 15 of us together? I'll go out, find the property, deal with the bank, do the due diligence, and then I'll manage it afterwards. And you just provide the money, and we'll own this asset together. And as I talked to a lot of people about that, they really love the idea, especially working in Silicon Valley, where real estate is so expensive. If anybody even thought, hey, I want to get into the real estate investment business and buy a single family home, and average prices around here might be $1 million. That's a lot to get into just one house. So the idea that you could put together an investment where people could potentially invest between $50,000 and $100,000 each, we could just pool our money together and they can invest passively. That was really attractive to people. So the first couple of deals I put together, it did start with mostly people that I had worked with, kind of in my long corporate career, as well as people that I had started to meet in Silicon Valley just through a lot of local real estate meetups.
And say a little bit more about this, and largely it's because I'm very passionate about this, but when you're owning real estate, I think it's really important to get diversification in geography. And so you're really helping clients do that too. And because it is so expensive here, it allows them to not put all their eggs in one basket as well. So talk a little bit about that. Talk about what your clients' concerns are about leaving the state of California and going elsewhere, and how you really work that to your advantage.
It's an education process. A lot of times when people think about real estate, they're thinking about their house, and people that do own their own single family home, their own residence in California, they've seen great appreciation over time. So that's a lot of times that's their mindset. Oh, I bought this house for $500,000 10 years ago, and now it's worth $1 million. Isn't that great? That's what real estate means. So it is an education process to say there's a lot of other markets across the country where houses aren't that expensive. They might not appreciate that greatly, but if you have them as rental properties, they can generate good returns. So that was part of the education process. And then the other part is trying to explain to them how you can actually manage a property, whether it's a single family home, which is where I started buying houses in Texas, or a much larger property. How do you do that remotely? And because that's often one of the people's first questions or first concerns is, okay, yeah, I have one rental property, but I love it that I can like drive by and see it, just to drive by and see that it hasn't burned down, for example. But I would often give people the example of my first houses that I bought in Texas, and I had a property manager. I would go there periodically, and there's really not much you can do. I would like go to Dallas for a conference, drive by the houses, and there's nothing you can see. Okay, there's a car in the driveway, house hasn't burned down, and I just kind of went on my way. And I thought, I'm not really doing much or adding any value or getting any benefit from that. So with good property managers who can do regular inspections and take photos of the house on an annual basis and help find tenants and deal with management issues, I found that personally, I felt comfortable investing away from where I lived, and tried to explain that to my potential investors about the fact that that is possible to do.
And we talked a little bit before the podcast started, because here at Capital Gains Tax Solutions, we're really trying to help people manage their taxes, like especially for people that make a lot of money and need those tax deductions. Where do you find them? And so you had talked a little bit about some of the accelerated depreciation that you're doing on some of your investments. Let's start at the beginning. Explain what that is to our investors, right? Or our listeners, so they can understand what that would mean as an investor. And then talk to us a little bit about how that works.
Yeah, so what's one of the great benefits about real estate is the tax benefits that come along with it. Through the tax cut regulations that came through a few years ago, they created this concept of bonus depreciation, which essentially allowed certain components of real estate be accelerated faster. So versus just a straight line depreciation, just an equal amount over the life of the asset, you can take portions of the purchase price and depreciate those in the first year. So for some investors who are looking for depreciation expense to offset their income on their tax return, as well as for the property itself, it can have a big impact for people. So for the mobile home parks, apartments, and RV parks that I've been part of putting deals together on, we've hired cost segregation accountants to do these studies, to go out and look at the property and separate it into its different components that tries to allow for faster depreciation of certain components of the asset. And for some of my investors, that's a big deal. My most recent project was for an RV park in Texas. Had one of my investors had recently sold a duplex, didn't do a 1031 exchange, and was specifically looking for a depreciation expense in 2022 to offset his gains. So he was looking at our investment through two lenses. Is this a good investment that I think is going to be, going to generate the good returns and be good for the 3 to 5 year hold period, but also in the short term, am I going to get depreciation, and how much would you expect I would get?
Got it. And talk to us a little bit about like what's the strategy with these particular properties that you're picking up? What kind of properties are you looking for? Are you looking to hold them for short term or long term? Are you looking for things that need some more fixer upper kind of things, or is it things that are more plug and play? Talk to us about that.
Sure. Yeah. Well, my first syndications that I put together was a couple of mobile home parks in Georgia, and that was a value add park in that it was, I would say, somewhat neglected by the previous owner, who had not done a lot of work on the property and therefore had kept rents really low. So we looked at it like, okay, if we can go ahead and make a little bit of investment in this property, a lot of it just visual, cleaning up the roads, the landscaping, fencing, painting the exterior of the houses, adding kind of creating a better look and feel in the park. We could slowly raise rents closer to market. So that was more of I guess, a value add proposition for that park. So in so yeah, maybe so. I guess get back to, I guess, what I was saying about the kind of the types of properties that I was looking for. I was looking for something to actually generate kind of higher than average returns. If I bought a mobile home park or apartment that was stable already, maybe generating 7, 8, 9% return, I wouldn't be able to give kind of an expected higher return that my investors would be looking for. So in these investments, we're typically looking for a 3 to 5 year hold period. I have some investors who say, hey, we've got this great asset. Why wouldn't we just want to keep it forever? But in reality, most people that get into these investments, sometimes 3 to 5 years even feels like a long time to have their money tied up. So I would say, in general, most investors want to have some endpoint where they can kind of see that, okay, we got in this property, added some value, then potentially after 3 years, we might be able to refinance it or start to test the market to see if it makes sense to sell. But then at least they could know by 5 years, they'll be out of the property, they can get their capital back plus their profits, and decide if they want to invest in some other kind of real estate.
And is it your plan to take that investment when you sell it and 1031 it into something else? Or is it, close the door, let all those investors go, and then start fresh again on the next one?
That's pretty much been our plan. We haven't been in a situation where, and I think some of it is kind of the number of investors you have involved. If it was just a joint venture where maybe you had 2, 3, 4 people invest in the deal and kind of get to the end of the road and decide, okay, we're going to sell. What should we do? In a situation like that, you might be able to look at each other and say, hey, should we just sell this and take the profits and move on? Or would we like to 1031 it and move it into a bigger property? When you have an investment with 10, 15, 20 investors, it's almost impossible to get a agreement among all of them what we should do in all the different scenarios you could have when you're thinking about selling a property. So really our plan is to just sell those and move on to the next deal.
And talk to us about who an ideal investor is for you.
An ideal investor for me is somebody who's looking to diversify outside the stock market. And it's, being in Silicon Valley, people are heavily focused on, IPOs and how well public companies are doing. People work at those companies, the Googles and the Facebook and Netflix and all the kind of high tech companies that you'll hear about. So it's talking to those people who are again, interested in diversifying into real estate, but really don't know how, and don't want to also deal with being a landlord, and again, spending the money they would need to do to buy a home, and dealing with all the management.
And if I were looking to get invested with you, talk to us. How do we find you? Where's the best place to learn more?
Yeah, so the best place is my website is www.blueelminvestments.com, my company name, Blue Elm Investments. And the deals that I've put together so far are I've had opportunities where it's open to accredited investors. Some have been open to both accredited and non-accredited. And for maybe your listeners who may not be familiar with that term, the SEC essentially tried to create some guidelines to say that somebody's a sophisticated investor and knows what they're doing with their money, and to just kind of come up with some guideline to put some borders around that. They said if you've got $1 million net worth, excluding your personal residence, or if you earn 200,000 as an individual or $300,000 jointly, somehow you must be sophisticated because you've either earned this much money or you've built this much net worth over time, and therefore you can invest in certain types of deals. So some of the investments I put together only allow people who are accredited. Other deals, it takes people who are both accredited and non-accredited. And if they're not accredited, don't meet that threshold that the SEC set up, but they're sophisticated, they understand investing, they might have a $800,000 net worth, not $1 million. So somebody that knows what they're doing, that's not investing their last $50,000 in savings to put money into something. So to kind of working with somebody like that, we would need to have a pre-existing relationship where I would have to know their situation, be able to explain what our company does and how the investment process works. I kind of understand where they're coming from. So in a situation like that, it's I work with my investors just to have one-on-one conversations over time to make sure that they qualify and kind of meet the SEC qualifications for allowing them to invest in certain of the deals I put together.
I love that you offer that opportunity, because as you and I both know, just because you're an accredited investor doesn't really necessarily mean you have all that much experience.
or on the other side, again, I was working with an engineer that makes $150,000, and again, they're smart, they know what they're doing, but they just don't meet this kind of artificial threshold that the SEC set up. So I was, especially when I started, I wanted to be able to work with people in those situations versus only somebody that again kind of exceeded the SEC threshold.
Yeah, absolutely. So when you contemplate a 1031 exchange, perhaps in the future, what's your biggest frustration with it?
Well, I think, when I talk to people about that, because I have had people ask if we accept 1031 money into the syndications I put together, and I have not had that structure available yet. I think people are often, it's a lot of it's the unknown about how they do it. They don't know where to turn, who to talk to. They've heard about 1031s. They know that it can make sense for them from a tax standpoint, but they know that there's rules around it and time constraints. And again, not knowing who to trust, who they can work with to guide them through the process, it just paralyzes them, and they end up just not doing anything. And usually just end up selling the property, and again, maybe trying to find another property to offset it, or just sucking it up and paying the taxes on the gain.
Yeah, that's a lot of what we do here at the Capital Gains Tax Solutions. Here at the podcast, just in educating people, but just in working with people. What are your options when you have this huge capital gain, and how can you continue to defer that capital gain? One of the things that we do here is we show people how to defer those capital gains, keep it at, not allow that taxable event to happen, and have the money available, which would even allow them to create an LLC that could even invest with you. And so it's really a great opportunity for people who want to stay in real estate or want to unload that highly appreciated asset that they have and get into real estate and do it in a way that actually allows them to leverage their money even greater. So I love
Yeah, I love it.
All right. Are you ready for the lightning round?
Yes, please.
All right. Your favorite book that you've read or gifted in the last year? besides your own. You can't just use your own.
Oh darn. Okay, I love the book I was involved in. I was just talking to I'm in a book club, and we were just talking about this one other book we read earlier this year called Who Not How by Dan Sullivan. And it's just about trying to find, like with every situation that comes up, think to yourself, not how am I going to do this, but who can I find to help me with it? So to
Yeah, I'm a
always be
huge
thinking about what am I good at? What are my strengths? And if certain things aren't my strength, can I find somebody else to use their superpower and to benefit them, benefit me, and to really grow your business faster?
Yeah, great book. I'm a huge fan of Dan Sullivan too.
Yeah.
All right, now I'm going to let you to plug your own book. So your favorite leadership quote or theme that you strive to live by. Let's talk about your email.
Oh, sure, sure. Yeah, I was involved in this great collaborative book project called Success Habits of Superachievers. Kyle Wilson, who was Jim Rohn's 18-year business partner and had promoted Jim and Brian Tracy and Dennis Waitley. We put together this, he puts together book projects, and I was part of this one. And it's about 80 different authors where we all have a chapter just kind of sharing our success tips and experiences to try to, inspire people. So Darren Hardy is one of my mentors, and somebody who was also part of this book project. And and he really focuses on being better every day. So I just love that kind of concept of just having he wrote a book called The Compound Effect as well, which is another great book. Just talking about like small little things you can do every day that stretching out over 2, 5, 10, 20-year time period can really have a huge impact on your life. So just striving to be better every day.
Excellent. All right, if you could go back in time, what would you tell your 25-year-old self?
I would say buy real estate earlier, and believe that it would be possible to create your own business versus just feeling like you have to go down the corporate path for that safety and security that you think is waiting there for you.
Well said. What are you most curious about right now?
Things I'm curious about are looking into 2023, just trying to decide if I'm going to kind of keep my business with this kind of in the similar asset classes I've been working with, or potentially branching out into others. I've been doing a lot of research into the mortgage note space, build to rent single family homes, short-term rental portfolios. I think there's some really interesting things out there that are, again, not what people might typically think of with it, whether it's apartments or mobile home parks or single family homes, that I think there's a lot of potential, and I think will be interesting things that my investors would also think are interesting. So those are kind of where I'm sitting right now, looking into 2023.
And you've had so much success in your career. What's one habit that you try to practice daily or weekly that helps you stay centered in your values and keep you moving towards your new goals?
Well, one of the things, and I'd mentioned this in my Success Habits book, is there's a little book called The 5 Minute Journal, and it's a daily journal where you just take 5 minutes every day. And just take a step back, I had always heard that like journaling is a great thing. It's great to get your thoughts out, and I tried it many times before, and it just didn't quite work for me. So somebody had told me about this 5 minute journal, and I it's again a great little tool where it's very short, one page. You kind of start out the day with like, what are you grateful for? What would make today great? And then at the end of the day, reflecting on what great things happened today and what could have made the day better. So it's something kind of every day you're starting off the day with things that you're grateful for, and at the end of the day, reflecting on really trying to think about what great things happened today. So versus somebody just going, "Oh, how was your day?" "Oh, it was okay." Like to really think about what were three like really great things that happened. So I just think kind of having that daily gratitude practice has been really helpful. So yeah, so I highly recommend the 5 minute journal for someone.
Yeah, that's a great book too. I've been gifted that, and it was
Oh,
a lovely gift.
okay.
So yeah, so funny that you bring that up. Well, listen, thank you so much for being on the show, and I want to encourage you to keep using your gifts and strengths to be a blessing to others. Just educating, helping other people, helping them learn real estate, helping them understand it. Tell them if you can leave California, it's actually a really good idea. Like all of those things are really good. Let's remind our listeners again, for those of you those who want to get in touch with you, what's the best place for people to find you?
Yeah, Todd, Todd at blueelminvestments.com. Feel free to reach out. Again, I love educating people about real estate, all different kinds. If anybody has any questions about what I do, or other things that I've invested in passively, I know sometimes people will come to me and say, "Hey, I'm interested in your investment," and during that conversation, I'll say, "Hey, have you heard about this other great self-storage provider or mortgage note fund or whatever it is?" I'm always happy to help give people guidance on other things that they can invest in addition to the opportunities I put together.
Wonderful. So that wraps up the show. I want to thank you, the listener, for listening to another episode of the Capital Gains Tax Solutions podcast. Again, we believe that high net worth individuals and their professional team should not have to struggle to find really awesome solutions to deferring capital gains taxes and building greater wealth. Don't let your failure to plan become your plan to fail, especially when the Deferred Sales Trust may be one of the best ways to exit your highly appreciated assets and defer capital gains taxes so you can continue to grow your wealth. Again, remember, please rate, review, subscribe, and come join us again. Thank you so much, Todd, for being here.
Thanks, Jess.